Ladies and gentlemen, good day and welcome to Q4 FY24 earnings call for Cartrade Tech Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involves risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sanghvi, Chairman and Managing Director. Thank you, and over to you, sir.
Thank you, and good afternoon, everybody. Just want to thank you all for joining this Q4 earnings call. Just wanted to start off and say it's been a very exciting quarter for the company, and we had also uploaded a presentation which I'll go through a few slides to give you all an idea of what the company's performed through this quarter. I think on first page 5, I want to highlight that revenue's grown by 52%, profit after tax grown by 43% in Q4. We are still the number one automotive portal in India, the largest used car classified business, the largest vehicle auction platform. Almost 17 million unique customers visit our platforms, OLX, Carvale, Bikewale, etc. Per month, as an average of per month in the last quarter. OLX, as you know, also has 100 million downloads on the phone, on a phone. There are 350 plus physical locations now for us. 90% of our 70 million customers a month come organically, which means we don't pay for this traffic. Our auction platform, Shriram Automall and the remarketing group had 1.2 million vehicles auctioned last year. Our revenues for the quarter Q4 are the highest ever at almost 161 crores. Our adjusted EBITDA was also the highest ever in a quarter, which was at 49.1 crores for the quarter. And a profit after tax was 25 crores in Q4 FY24. As you know, we are a debt-free company and a strong cash balance of almost 750 crores. When you go to the consolidated results, which is page 6 of your presentation, as you can see here, the revenues grew by 52%. The operating revenues grew by 52% for the quarter. The year-ended revenues have grown by 37%. As you know, here OLX was only there 8 months in the year, consolidated from August 11th. If you see the adjusted EBITDA was highest at 49.1 crores for Q4. The EBITDA without other income, without our interest income, was up 77% for the quarter. And the adjusted EBITDA without other income, without all our interest income for the whole year went up 63% or almost 100 crores. If you see the profits of the company, the PBT was 29.72 crores in the quarter, on our highest ever again, up by 30%. The PBT for the year was 98 crores versus 60 crores, which is up 62%. And our profit after tax for continuing operations was up 103%, which doubled from 40 crores to 82 crores during the year. The profit, including discontinued operations, was 25 crores for the quarter. So it's been a very healthy financial and strong financial performance for the quarter 4. If you go to slide 7, which is our standalone results, if you see, I think this is one of the things which most of you have asked is on our margins for our standalone business. In the quarter, the margins have grown from last year 19% to this year 26% for the quarter, which has shown a sharp increase in our margins, which is adjusted EBITDA margin without other income. This has sharply grown up. Our revenues have grown up by 20% on a standalone basis for the year. Our adjusted EBITDA is up 41% during the year, excluding other income, which shows that our adjusted EBITDA is going up at double the rate of our revenues. And profit after tax on a standalone basis up 29%. It is slightly lower at 29%, up because of the reduction in our interest income because of the acquisition of OLX. So really, it's been a strong performance from the standalone business as well, and margins have grown out there. If you look at slide 8, which is our remarketing results, even though it's been a flat year in terms of revenues for it, its profits have slightly improved 8% in this quarter. Adjusted EBITDA is up 8%. In fact, adjusted EBITDA at 16.3 crores is also reasonably good with 29% margins. But on the whole, revenues have been flat in this business and profits have been also flattish during this current year. And this is as a fact of repossession vehicle supply coming down, which has been mostly replaced by our retail supply of vehicles. If you look at slide 9, which is the OLX India results or Sobek Auto results, as you've seen here, we had last quarter a discontinuing continuing operations. Now, this quarter, March 31, we only have a continuing operations, and as we had indicated at that time, the revenue is now at close to 45 crores, and the profit or the adjusted EBITDA is close to 11 crores, which is very similar to last quarter. Some marginal costs have gone up from the last quarter, which have come to the continuing business, but overall, it's almost at a 9 crore profit for the quarter, and we're quite confident of sustaining and growing this from here. It's a tremendous base. As I said, a lot of the work last year for OLX India has been, the technology transfer, putting together the product and the technology team, getting the management team in place, shutting down the loss-making businesses, and all that has been completed. And as you can see in quarter four, a completely only classified result of 45 crores and 11 crores profit out here. This is what I had to say. In fact, the brand also on Google Trends, if you see slide number 11, shows strength of the brands of Carwale and Bikewale. On slide 12, you can see the brand of OLX continue to be strong. And as I said, our traffic continues to grow. So this is what I had. I'm happy to open up for questions and answers now to answer all your and clarify all your questions and doubts. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Mr. Vijit Jain from Citi. Please go ahead.
Yeah, hi. Thanks.
Hi,
Can you hear me?
Yes.
Hi, Annie. Vinay, congratulations on pretty terrific results here that we can see across the three businesses. My first question is for the OLX India Classifieds business, are we looking at what will now be the recurring cost structure for this business now? And also, if you can, talk a little bit about growth in this segment, because since you acquired this company, it seems to be somewhere around 43 crores a quarter revenue business, pretty steady at that. So your thoughts on that? That's my first question. Thank you.
Thanks. The OLX, the costs are fully now, this is what the costs are. I think the continuing operation is probably steady state.
Right.
The reflection of financial Q4 are the reflections of steady state for this business. Obviously, our attempt is to grow this 44 crore quarter revenue from here. And it is a typical, classified kind of marketplace where as revenues grow, costs don't grow in relation to the revenues. And you'll see that now in the next few quarters that as our revenue continues to grow here, that profitability will rise at double the pace, which is, as you see even in the consumer group. I mean, as revenues grow, our profits tend to grow at 1.5 or 2 times the speed of revenues growing. And we want to have the same dynamics here, where increase in revenue, multiplies growth and profits. I think this is the leverage we have on our costs. Again, here, there's very low marketing costs, almost zero marketing costs, and reasonably, high leverage to profitability with revenue growth.
Got it. And, any thoughts on sharing more, metrics around OLX India, traffic trends, category-wise mix, those kinds of things, now that, this business is, on a recurring basis?
Yeah, sure. We will. And I think the traffic tends to be about 30 odd million UVs a month. As I said, a large part of it is on an app, on an app on a phone. Almost all of it is, zero net of marketing. There's no marketing cost to this traffic, which is making it, giving it the OLX business strong margins. We'll start sharing the traffic metrics with you, very soon. I think now that there's some stability, that's something we'll start doing. If you look at the segmentation also, automotive tends to be about 45-50%. The rest is non-automotive. That's the other segmentation of the classified revenues, which also, over time, we'll start sharing in a breakup of automotive and non-automotive.
Got it. Thanks, Vinay. My next question is on the remarketing business. Fair to say that overall this business seems to have bottomed out from here. I see the volumes are still down on a YOY basis, but the decline seems to have reduced and revenues are flattish YOY now, for declining for 3-4 quarters. So that's my first question on the remarketing business. And is this coming from, continuing growth in the retail side, or has the repo business also bottomed out?
The repo is definitely, the repo is flattish now, so it's bottom to flattish. The repo, and it actually the last quarter is still going on, but we're hoping that it is flat now, from this year. Actually, last year it has begun, and we're hoping that it's flat, this year. But it's hard to predict. I think what's driving even the flattish nature of this business is the retail growth, I think clearly, which we're putting tremendous efforts to continue to grow. That doesn't change how we're thinking about the business. So we need to continuously grow what's in, and what we have control on, which is the retail business. The repo business will bounce back as and when it does. So, we are hoping that it's flattened out and it's bottomed out, rather than flattened out. We're hoping it's bottomed out. But, we thought that last year and it still went down. So, we're just looking and saying, listen, what's in our control is growing all the other supply sources and focus on that. But we do believe it should have bottomed out, yeah.
Got it. And my last question is for Anisha, just on this. So if I just look at, the costs below EBITDA line, right, and the balance sheet and the cash flow statements, if you can just talk about, the lease cost trends, the financing costs, and the working capital intensity for the full year F24 versus F23, and if there's anything to, understand over there, that will be helpful.
Sure, Vijay. So I think you're looking at the consolidated set of accounts because it has OLX in it. It looks like a jump. But if you go independently, these are static costs. They've barely moved because we don't have debt in the company, so we don't have any finance cost. So the only increase you see is on account of lease accounting.
Right. And why have the lease costs gone up so much? Is that all related to OLX itself, or there are lease cost increases related to the remarketing business as well?
So it's disclosed independently in each of the slides with it. So if you look at the standalone entity, there's the total finance cost itself is only 16 lakhs, and including depreciation, that cost is increased only by about 1.6 crores in the quarter, which includes both depreciation and finance costs. So majority of the increase is on account of the OLX acquisition, but standalone and remarketing have also marginally increased on account of additional leases that we have taken. Mainly in remarketing, and standalone there's just one new property that we have added, or one new floor that we have added in the business.
Oh, okay, got it. Great. Yeah, I think those are my initial questions. I'll just get back into the queue. Thank you.
Thank you.
Thank you. We have our next question from the line of Siddharth Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity and congrats on the great set of numbers.
Hi, Siddharth.
Sir, first question on the OLX side again. I mean, would it be possible to share some insights into what can sort of help improve the run rate from current levels? Which are the areas you plan to target in the first year, and when can we see that sort of benefit sort of coming in the revenues? It can be both on monetization or the segments which you think can help us sort of scale up faster.
Was the question on how we grow revenues? I mean, simply, was that the question?
OLX, right.
Got it. Right. So OLX has got two sides of it. It's got auto and it's got non-auto. As I said, 45-50% is auto. Within auto, it's used cars basically. And obviously we believe that the used car classified business is lots of runway to grow. And OLX is obviously focused on growing used car classified revenues by adding more dealers, by increasing our ARPU per dealers, providing more value to the dealers, increasing traffic and supplying more traffic to dealers. So it's a typical classified model of dealers paying subscription revenues for listing vehicles. And as I said, there are 30 million customers who come to OLX, and that is why dealers list on this platform. So clearly for us in the immediate future, I would say next 2 quarters would be focusing on the used classified business, something we understand well as a group, and that would be the big focus for, I would say, next two quarters. Post the 2 quarters, we are also extremely optimistic about the non-auto side. The non-auto side got homes, jobs, electronics, two-wheelers, primarily, and household. The idea is to grow those 5 segments as well. And obviously we're putting together a plan of action, a team, etc., in those segments, which will probably take, a couple of quarters for us to, understand better and then focus on growth there. But it's a two almost like a short-term growth objective and a little, I would say an immediate plan of action, which is growing used cars. And a short term would be the non-automotive segments. And of course, then in the medium and long term, growing other segments as well, which are not here even today. So the intent would be to focus on growth over the next 1, 2, 3 years in OLX. And the multiple, in fact, that we believe the TAM is just unlimited. So whether it is used cars, whether it is non-automotive, in many ways, it's enhanced the TAM of the entire group, not just OLX.
Got it, sir. And just a clarification on this OLX again, I mean, when we acquired this entity, we had highlighted it had about 35 million plus MAUs. Now we are talking about 30 million. So has there been any moderation or this is the way accounting has changed or something?
I think we're also finding ways of, it's about 30 odd million now, but it's also about how analytics how analytics work, and we're given a brief indication that's what it was, but we also moved from a global environment to our environment and the analytics related to it. So the traffic is pretty steady. I don't think, in fact, it's now we feel, there's a marginal growth we feel, but it's also how the analytics are laid out in the business.
Okay. Got it, sir. So second question on this standalone business or the consumer business. Here we have seen growth rates sort of slightly coming up from, say, beginning early 20s to now mid-teens over the last 1 year. So going ahead with the industry tailwinds from like the supply normalizing, inventory levels building up, do we expect that the growth here can be faster as we go ahead into the year, because OEMs will need to spend more to sort of get customers? So any thoughts, any indications you are seeing here?
The new car business in FY23 grew by about more than 40%, about 40%, I think. And this year it's about 20%, right? The new vehicle business for the consumer group. And I think the car industry last year grew by 8%. So it's clearly ahead of the car industry, and it's also grown at 20% last year on a higher base of growth the previous year. We've always indicated this, that this is the rate of growth we normally see in these businesses. And the car industry is reasonably, I would say, demand has been strong and supply has been strong, which is a good place to be, I would say. Both demand and supply are reasonably strong. In fact, we had marginal growth in the car industry in April, as the car companies have declared their volumes. But last year, the car industry grew by 8%. Whatever analysts I see and manufacturers I hear, I think they think the car industry will be between 0 and 5% growth this year. They believe that. I think that's reasonably okay for the consumer group when you have that level of growth, because it's growing on a high base too.
Okay. So lastly, in terms of Anisha, for you, basically just wanted to clarify this, that the presentation says that the cash balance is about 750 crores, but if you look at the balance sheet, the investments and cash in banks, the numbers add up to close to 670 crores. So just if you can point out where the remaining number is sort of sitting.
Sure. So there, you will see it in the caption called investments. The others would be in other balances.
Okay. And the ESOP cost of 6 crore sorry?
I'm sorry?
Right.
So I just was mentioning this ESOP cost of 6 crore per quarter. So this is now a sustainable run rate for the next year also, or should we expect some normalization in this number?
No, we can expect the ESOP cost to be around this range even in the next year.
Okay. Thanks, Anisha. I'll come back.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Ankit Kanodia from SmartSync. Please go ahead.
Thank you for taking my question and congratulations on the set of numbers.
Thank you.
Hi. Yeah. So my first question is related to numbers. So in the OLX business, this quarter we have seen a rise in ESOP, finance and depreciation cost. So any color on to whether this will be continued in the subsequent quarters, or we expect some moderation here?
Yeah, I think all OLX costs are almost like steady now. I think one should anticipate that some of this will, this will be a reflection of costs. Then almost. Yeah.
Okay. And trade receivables have almost jumped, I think, 50% compared to last year. What is this trade receivable, if you can clarify? What are the nature of trade receivables?
Anisha, you can add on, but I'll just trade receivables from customers, which could be manufacturers or advertising agencies. And that's the nature of it. I think with revenue growth of 50%, trade receivable accordingly grown as well. I think that's the ratio. But Anisha, you want to add on to anything?
Yes, and in fact, even in the trade receivables, there will be an element of OLX which gets added because what they are looking at is the consolidated set of accounts. So there is about a 10 crore number which is from OLX, which is added to the base.
Okay. Do we expect that OLX number to come down in the subsequent quarters?
Yeah,
I don't think trade receivables will come down. I think it will be almost steady state, right, Anisha? Is that correct?
Yes, it will be a steady state number.
So this trade receivable of OLX is basically on the continuing business, not from the discontinued business.
Yes, it's from the continuing business.
Okay. My second question is related to the synergy. So what I see in Cartrade Tech's journey is that we have acquired several businesses over several times, but I still find it unable to understand how is the synergy playing out, because I see Carvale as a separate platform. I see Shriram Automall as a completely different separate. Similarly, OLX also is a wonderful platform, but how are we synergizing the benefit of all these different platforms? Because I don't see that synergy coming in. Maybe I'm unable to understand, but if you can throw some more light as to what we are working and in how many quarters we can see that synergy benefit accruing to the company, that would be very helpful.
Sure. I think the first thing I want to clarify is that when we acquire a company, we try and look at synergy, but we also try and make sure these businesses are good on a standalone basis, which means that if there was no synergy applied to any of these businesses, they must grow revenues, margins, and customer experience in their own field independently. So these acquisitions are not done only for synergy. They were done as good independent businesses too. Of course, we believe there are customer synergy. For example, if a used car dealer today is bidding for a vehicle on Shriram Automall, that same dealer is listing a car on OLX or Carvale for sale. So that's the obvious customer journey, synergy, right? If a consumer is coming to Carvale to sell a car or buy a new car, it's also selling a used car on OLX, right? The same customer. So there is a lot of customer synergy which exists across, which is not apparent to everybody, but exists across these platforms. Just so also when we acquired Carvale had a used car classified business and Cartrade had a used car classified business. So the first thing we did with synergy was we allowed dealers who are selling used cars to list on one technology platform cars on Carvale and Cartrade seamlessly, which means if you're a dealer and you want to sell your car, earlier you'd have to go to Carvale separately and then buy a separate package with Cartrade and then list your car. Here, on one list, you can do it with both. Obviously, when we acquired OLX, the intent would be that if you're a used car dealer using Carvale and you're using OLX, the intent would be, which is what our tech team is now currently working on, that if you want to sell your car on Carvale OLX, with one press of one button, you can go onto both platforms, which gives dealers an access to both platforms, gives consumers to access from both inventory in both places, and obviously it helps us monetize the dealer better. So some of these synergies, whether it's customer synergies, whether it is technology synergies, we've been exploiting over the last many years. I think, and we've always tried to work at synergy at least in the group, has been on a very arm's length, win-win basis, which means we don't enforce synergies on our teams. If they believe there's a win-win relationship with another sister concern, then they choose to work with them, and it's always completely on arm's length basis. I think that's the way we function. But there are a lot of customer and obvious technology synergies out here.
Great. Thank you so much.
I'll give you some examples. I only give you 2-3 examples of it, but yeah.
Yeah, and I think you only missed the Shriram Automall.
Shriram Automall. So Shriram Automall, there are 2-3 obvious synergies. Dealers buying vehicles Shriram Automall list on Carvale for sale. So that same dealer is being tapped by the group in 2 different places. So that's the first, customer synergy which exists automatically. But I think the one we're trying to make work, to be honest, which is harder, is people coming to Carvale or now OLX to list their car for sale, consumers like you and me. Can we get them to auction the vehicle on Shriram Automall? And that's been a harder challenge than we think. But that would be the other obvious synergy, which is still not fully exploited, I would say.
Yeah, if you can share some data related to like what you said just now, as in where a dealer who has auctioned the car can also sell the car on Carvale. So if you can share some data related to how many cross-selling opportunities or those things are there, I think that would be very helpful to us.
I think for me, from a competitor angle, we won't want to publicly share the data. But I'll tell you one thing, that in fact, I said something else. I said dealers who are buying vehicles in Shriram Auto Mall are also selling on Carvale OLX. I think the other way around.
Yeah.
But obviously, due to competitive dynamics of the business, I'm not sure whether we will want to give out number of dealers using all our platforms, et cetera, et cetera.
Right. One last question related to the standalone numbers. So, over the year, it is showing 20% growth, but towards the last quarter, it is showing only 15% growth. What could be the reason for this slower growth?
No reason as such. I just think that even the base of last year is probably higher, but no reason as such. The Q4 was probably the best quarter in the consumer group ever anyway, so close to the best quarter ever. So I don't think there's anything at all. Nothing from a business standpoint we've seen.
So I know that you don't provide any guidance, but generally 20 to 25% growth rate is achievable in the foreseeable future also in the standalone business?
Yeah, as I said earlier, we tend to grow those rates of in decent years. Our track record is that. So I don't want to talk about the future, but our track record is what one should see.
Thank you so much.
It may be a little different in an M&A year, because last year was an M&A year. This year, there's part effect of M&A because OLX is not fully factored last year. So it may be a little better in M&A years, but otherwise it tends to be in that range. The track record is that.
Thank you so much, and all the best for the future.
Thank you so much. Thank you.
Thank you so much. We have our next question from the line of Atul Bose from GMFL Financials. Please go ahead.
Hi, team.
Hello. Yes, we can hear you.
Yeah. So first of all, congratulations on good set of numbers. So my question is around OLX business, that there has been a dip in margin for OLX in this quarter. So where do you see this margin stabilizing in future?
There's been a slight dip just because some costs, as we had indicated in the last earnings call, have moved from discontinuing to continuing operations. But this is normal now. So this is a normalized. Now we see the margins will improve from here. And margins will improve on account of revenue growth now. I think all the costs are factored. This is probably a completely normal quarter for OLX, and it's stable. So from here, as revenue grows, we believe that margins will continue to grow. And I've said earlier in the call that when revenue grows, we expect margins to outpace. And like you've seen the consumer group, around 19 to 26. We just also would like to see, and we believe that OLX with revenue growth will see disproportionate margin growth as well.
All right. And if you can share any color on how will the OLX revenue will shape up from long-term view?
So we had given some discussion on the call earlier, but there are two segments, automotive, non-automotive. Obviously, our intent in the immediate term right now is to grow the automotive side, which is 45-50% of the business. And over the medium, I would say short term, this is after 6 to 12 months, would be to grow the non-automotive side. But we all believe that OLX has very, very strong growth potential. The acquisition itself was probably game-changing for Cartrade as a group, and obviously given us an opportunity to explore other segments outside automotive. Although we have continued to be very bullish about used cars with OLX, it also gives us a chance to do homes and jobs and electronics, two-wheelers, etc., etc.
All right. Thank you.
Thank you.
Thank you.
Thank you.
We have our next question from the line of Arpit Shah from Stallion Assets. Please go ahead.
Hello.
Yeah, go ahead, Arpit.
Yeah, just wanted to understand the ESOP cost for FY25. Would it be around 25 crores?
Yes, I think maybe around that. That's probably right. It's probably the same rate as this quarter, so probably similar. Am I right? That's correct.
Hello.
Yeah, do you have any other question? No.
Yeah. So in Q3 call, I think so we had highlighted there are going to be some one-off costs in Q4 and Q1 pertaining to OLX. So can you quantify what is that number in Q?
No, we have not indicated that. And there is no one. Everything is done. There's no one-off cost now. We had indicated that in Q3 there were some one-off costs. There's no one-off cost in Q4 or Q1 next year.
So like we were going to see some depressed profitability in OLX business due to some reorganization which we had to complete in the auto classifieds business. So I was just asking that.
No, there is nothing. Manish, am I correct? There's nothing now which, as you see the quarter of Q4, I think that's more in a stable state. There is no further one-off kind of cost.
What we had indicated in the Q3 results was that in Q4 we would see a bit of a decline in the profit on account of the CTX overhead being absorbed by CLA, which is already factored in the Q4 results. And Q1, the